Leadership Lessons from the Great Depression. What every leader must learn about crisis. Imagine waking up one morning. You check the markets. Your investments are down 30%. Your business revenue has fallen. Banks are collapsing. Your neighbors are lining up outside soup kitchens. And the newspapers are saying something deeply comforting. The economy has entered a small period of temporary turbulence, which, historically speaking, is economist language for "this might get ugly." Welcome to 1929, the beginning of the Great Depression, one of the most devastating economic crises in modern history. But here is the strange thing about crises. They don't just destroy economies, they reveal leaders. And today, we're going to explore 3 powerful lessons from the Great Depression that every modern entrepreneur, investor, and manager needs to understand. Because economic volatility is not a question of if, it's a question of when. In October 1929, the American stock market collapsed. Fortunes disappeared overnight. Banks failed. Businesses closed. Unemployment soared to nearly 25%. Imagine 1 in 4 people around you suddenly losing their jobs. That wasn't a recession, that was an economic earthquake. Confidence vanished. Fear spread faster than bad news on social media. And governments around the world were scrambling to understand one terrifying question: how do you lead when the entire economic system is shaking? In 1933, a man stepped forward. His name was Franklin D. Roosevelt. And the situation he inherited was, well, let's say it politely, a complete mess. Banks were collapsing, farmers were bankrupt, factories were idle. Confidence was gone. But Roosevelt understood something that many leaders forget. When people are afraid, they don't just need solutions, they need hope. Through his famous fireside chats, Roosevelt spoke directly to citizens over the radio. Calmly, clearly, honestly. He explained the crisis, he explained the solutions, and most importantly, he reassured the public that the nation would recover. This was leadership not just of policy, but of psychology, because economies run on something invisible, the strategy. Roosevelt launched what became known as the New Deal: public works projects, banking reforms, infrastructure investment, financial regulation. Millions of people went back to work building roads, bridges, dams, and schools. The goal wasn't just economic recovery, it was restoring belief in the future. And here is an important leadership insight. In times of crisis, leaders must make decisions before certainty appears. Waiting for perfect data during a crisis is like waiting for perfect weather before leaving a burning building. But crises don't just produce political leaders, they also reveal strategic investors. One of the most famous was John Templeton. In 1939, as the world was entering another crisis, World War II, Templeton made an extraordinary decision. He borrowed money and bought 100 shares of every company trading below $1 on the New York Stock Exchange. Many people thought he was completely mad. Some probably suggested professional help. But Templeton understood a powerful truth about markets: panic creates opportunity. Years later, that investment multiplied many times over. Templeton became one of the most successful investors in history. His philosophy was simple: the best time to invest is when pessimism is greatest, which is a polite way of saying when everyone else is panicking. Now here's the deeper lesson. The Great Depression wasn't just an economic crisis. It was a leadership test. The leaders who succeeded had 3 qualities: clarity, financial understanding, strategic courage. In other words, they practiced what I call financial strategic leadership. Because leadership is not just about vision, it's about understanding, cash flow, risk, capital allocation, and long-term value creation. History is full of talented managers who failed during crises because they did not understand the financial reality of their decisions. Now let's bring this back to today. Because economic volatility has not disappeared. We have seen financial crises, pandemics, supply chain disruptions, inflation shocks, geopolitical tensions. In other words, the modern economy occasionally behaves like a caffeinated squirrel. So, what should today's leaders learn? Lesson 1. Calm is a leadership advantage. Roosevelt's calm communication restored national confidence. In business, panic spreads quickly. The calm leader becomes the anchor. Lesson 2. Financial literacy is power. Templeton understood markets because he understood valuation and cycles. Many managers today still avoid finance like it's a tax audit, but eventually, every leader is judged on financial performance. Lesson 3. Crises create opportunity. The companies that dominate the next decade are often built during downturns. Some of the world's greatest companies emerged during difficult economic periods. Why? Because competitors retreat and bold leaders advance. So here's the real question. If the next economic shock arrived tomorrow, would you react like the crowd? Or would you lead like Roosevelt and invest like Templeton? Because crises do not only test organizations, they reveal leaders. If you're a manager, entrepreneur, or future executive, and you want to understand the financial thinking that separates great leaders from average ones, that's exactly what we explore here on Leadership Stories 44. We study history, we analyze strategy, and we learn how leaders make better financial decisions. So if that sounds useful to you, subscribe to the channel, and I'll see you in the next episode. Because the best leaders don't just study success, they study history.